Hi, JJ here with The Art of Value. Recently, Mohnish Pabrai had a Q&A session with students from William and Mary College, in which he was asked about his fund's investment in Micron Technology. In that Q&A session, Mohnish was a lot more forthcoming about his investment thesis for Micron than he has been previously. So in this episode, I'm going to summarize what he said. Mohnish began by saying we're not going to know whether the bet worked out for quite a long time until the dust settles. So we've got to give it time to play out. How long does he mean by letting it play out? Later on, he talks about 7 to 8 years, where the stock will be in 7 to 8 years. He's probably thinking at least that long term, but we might know earlier on how it's going. His first positive point is that the cyclicality of the memory business has gone down a lot in recent years. He says DRAM used to be a terrible business. His second point, which is related, is that the sector used to have a dozen players and now it's down to 3, and they have 95% of the market. Some new information from Pabrai is that he said a while ago he had a conversation with Charlie Munger about oligopolies, like Micron and its 2 other sector players. He gave the example of Coke and Pepsi. He said companies can't sit in a room and collude and set prices, but as long as they don't engage in illegal actions like that, oligopolies can do very well. Mohnish said he asked Munger about the nature of oligopolies, and Munger said that Buffett studied Coke and Pepsi bottlers in different regions around the world a while ago and found that in 95 to 97% of the markets, bottlers on both sides of Coke and Pepsi did very well. Buffett found in the 3 to 5% of cases, one company decided it wanted more market share and started engaging in price wars and so on, other tactics to try and gain market share. But it didn't work. It ended up that nobody ended up making money. In that 3 to 5% of the market, the customer did well because of the price wars and so on, but the companies, neither of them made money. But in the other 95 to 97%, both companies did well. So the understanding is there that as long as there's no illegal activity, no price collusion, all sides in an oligopoly can do well if they are happy with their market share. And as soon as they try and engage in price wars and so on, they both start losing profits. So how does this relate to Micron? Well, Pabrai noticed that Micron, Hynix and Samsung, the 3 players in this sector, speak to the markets quite a lot. They give a lot of information about what they're doing, more than they need to, more than each quarter. And what he realized there with their press releases and their investor days and other information they give to the market is that they're not really speaking to investors. Well, they are, but they're also speaking to each other, letting each other know what they're up to. So they're not colluding, sitting in a room in private, talking to each other and setting prices, but they're giving each other a lot of information about where they stand. So he says the unsaid message there between the companies is, we're happy with our market share, this is what we're doing, this is where we're at, and it's all public information. More interestingly, Mohnish said he met with all 3 companies, and he said to Samsung, who used to be the low-cost producer, that they could gain more than 50% market share if they cut prices and so on. But they said to him that they didn't really want to do that. They had no interest in doing that. If you're enjoying this episode and watching on YouTube, please consider giving us a like to help it to spread it to more people. Thanks. Samsung in particular said bad things happen to them when they try and go over 50% market share. Customers like to have a second source option, which is fair enough. And they don't want antitrust scrutiny. Say if they had 80% market share, they don't want the scrutiny of being a possible monopoly having that much market share. So Samsung said they'd be happy with 50%, and he said the other players said much the same thing, that they're happy with where they're at and they don't want to try and claim market share of the others, not to a large extent. He said Micron used to be behind the other 2, but they've caught up and perhaps a little bit in front. And it looks like it won't change. They're kind of happy with their market share, and it looks like there won't be a 4th player in the industry as well. So what we have there is an oligopoly situation where all 3 companies are happy with their market share. There's no competitors that look like they'll come up to be a 4th player. All 3 companies should do well over time, Mohnish thinks. The bottom line is that there are 3 cooperative players in the sector, and there's no alternative to it. There'll be no disruption, so they'll be happy, and all companies should do well. All 3 companies should do well over time. He also thinks that the NAND market might consolidate at some point, which would make Micron an even better business. So he says his theory for Micron is that with all this growth coming down the pipeline from AI, self-driving cars, 5G, data centers, so many things in growth in the next, say, 10 years, that Micron will do very well. He says with all these things taking place, there should be a huge demand volume for memory over, say, the next decade, and I agree with that. That's why I'm also invested in Micron. It's not investment advice, just telling you my position. There you have it. In the next episode, I'm going to talk about Mohnish's destination analysis, which he also talked about what's going to happen with the stock, the company, over the next 7 to 8 years as he sees it. So if you're watching this in the future, I'll come back and put a link to that at the end of this video and in the description so you can watch that one as well. If you've got value out of this episode, please consider subscribing on YouTube if you're watching there, or if you're in your favorite podcast app, follow and subscribe, whatever it allows you to do. Thanks for watching or listening.